It does take us to our talk of the tape, whether the reversal in momentum portends a rough patch for stocks overall. Let's ask Chris Verrone. He is partner and head of technical and macro research at Strategas. It's good to have you on a day like this.
Great to be here.
You're watching this Momo roll and you're thinking what?
Yeah, well, first, I think we got to put this in a little bit of perspective. We're 24 hours removed from a new all-time high on the S&P, 24 hours removed from a new high on the triple Qs. So to say that this market's on the cusp of some great rollover, I think is a bit aggressive. What we do have and what we have had are some divergences develop over the last number of weeks. We see it through the lens of momentum over the last 24 hours, hitting Palantir, hitting Robinhood, hitting Carvana, but also hitting Goldman Sachs and Blackstone and BlackRock. So I think it's a shot across the bow. I don't think we're on the cusp of some devastating bear market, but could we correct or consolidate into, frankly, a weaker seasonal period ahead of us? I think it's certainly a reasonable view.
I mean, you would suggest, though, and you are, that when you look inside the market at the internals, that they didn't confirm the recent record high.
It's the first time in really 18 months where the recent highs have not been met with this swell of breadth, right? We only have 60% of issues above the 200-day moving average. The advanced decline line this week did not make a new high along with the S&P. Again, these aren't fatal developments, but it's certainly a change in the character. The language that we've been using is this is a very, very split tape. It's probably great for long short. I think you've seen it all earnings season. This divergence between winners and losers has certainly been pronounced. But what I also think is going on under the surface is you have this subtle leadership rotation taking hold. I mean, healthcare is quietly starting to perk up. We talked about it last time on the show. Abbott, Gilead, Bristol, quietly some turns there that I think is reflective of a more modest shift to some defensive sectors.
Yeah, I was going to say, that's not exactly the greatest sign for the overall market, which had looked a little bit tired lately, though really resilient. We've commented on that all week.
Absolutely. And, here's what I think is important, Scott. When we see cyclicality pausing domestically, I think the big takeaway is, though, it's not being extinguished globally. I mean, the cyclicals in Europe are on fire here. The cyclicals in Asia are on fire. So it seems like, if anything, cyclicality has just migrated to our east. And I think it's reflective of, frankly, of a value trade that's starting to take shape globally. I mean, all these things we talk about, healthcare, some staples, Europe, China, are all part of a stealth value trade.
I mean, are you a buyer of that, too? Because, that's been a key part of the conversation as well, that the better value, the better return this year is going to come from Europe and China, not necessarily the United States.
In fairness, we were early here, so early in this business is wrong. We were probably too early at this point last year talking about this turn in China or potential turn in Europe. But I do think this is the real deal. When you look at just the expansion and breadth in Europe, the surge of momentum from China, the very pro-cyclical leadership, Chinese tech, Chinese consumer discretionary. Frankly, it looks a lot like how our market behaved 18 months ago over there.
The Qs were on the verge of a new high, too. I mean, the NASDAQ 100 was back. A lot after sleeping for a bit, money started to flow back into tech. You've been watching Bitcoin a lot, too, as it relates to the Qs.
Yeah, it's an unusual dynamic where for basically the last 2 years, triple Qs and Bitcoin have been tied at the hip. And the last 5-6 weeks, that has diverged here a little bit. So the extent to which, both of these reflect risk on or animal spirits or this very pro-liquidity environment, it's not lost on us that Bitcoin has really not kept pace with the triple Qs here. We'll see what that develops, but it's kind of added to the package of some of these divergences that I think at least suggest consolidation for the broader markets. Listen, the trend is up. The long-term trends are still good. We have a lot of support underneath this market, 5,800, 5,850. But I think tactically there are some reasons for some caution.